PSUs in the railways engineering space delivered a stellar performance in the quarter gone by. These companies have seen good recovery led by improving execution and margins on account of higher scale. The strong order book, government's focus on railway capex and timely execution are expected to support this growth momentum in the coming quarters. The companies we cover in this space, RITES, Ircon International and Rail Vikas Nigam, on an aggregate basis delivered strong 37% year-on-year revenue growth. December quarter was one of the best quarterly performance in the last 2 years, and the credit goes to higher orders in hand and execution. On a relative basis, execution in the railways engineering space has been good on the back of relatively mild impact of COVID-19 on the project execution and availability of resources. Also, the strong balance sheet and prompt payments have encouraged the companies to book revenue. RITES reported a robust 71% year-on-year growth in revenue led by a multifold jump in export revenues, which expanded to 357 crores in December 21 quarter as against 2 crores in the corresponding period last year. Ircon and RVNL had relatively lower growth, but the overall performance was still above expectations because of strong execution. In terms of margins, despite cost pressure, the companies were able to maintain margins because of higher scale, utilizations and pass-through mechanism that they have for most of their projects. On an aggregate basis, EBITDA margins on a year-on-year basis improved marginally by 10 basis points to 8.8%, leading to a strong 37% YOY growth in operating profits. RITES lost close to 400 basis points at the EBITDA level, largely because of poor performance of its turnkey project business. Barring that, performance at the EBITDA level was good for the rest of the companies in this space. However, due to lower other income given high dividend payout, the aggregate net profit grew by 18% year-on-year. Apart from the financial performance, the other notable point is that order inflows have been quite good. Ircon International, for instance, bagged close to 11,000 crores of orders to be completed in the next 3 to 5 years. This includes Mumbai-Ahmedabad high-speed rail order worth 5,100 crores. Its order book has seen a good spike from 34,900 crores in Q2 FY22 to current level of 43,500 crores. Similarly, RITES bagged orders worth 300 crores during the quarter, taking its total order book to 5,100 crores or close to 3 times its annual revenue. Moreover, companies are hopeful of strong pipeline, particularly in light of higher capital expenditure announced in the budget. Now, do remember that capital expenditure for railways has been increased by 14% in the union budget to 2.5 lakh crores. While new projects would be awarded on a bidding basis, companies are confident about the orders. For instance, in case of Ircon, closer to 45% of its orders are backed on a competitive bidding basis. Besides, companies are also looking to diversify into the exports market, road sector, urban planning, smart cities, renewable energy and other areas. Ircon, in fact, has indicated an investment of nearly 200 crores in a 500 megawatt solar power plant utilizing surplus cash with a pre-agreed IRR of close to 14%. Additionally, the companies are looking to tap opportunities in development of dedicated freight corridor, high-speed rail network, station development, metro and railway electrification projects. Execution is in full swing and margins are stable. Considering the strong order book, they should continue to post good results. The companies have maintained guidance on the back of order book and execution. On an aggregate basis, these companies under our coverage are sitting on an order book of close to 1.08 lakh crores, which provides very good visibility for the next 3 to 5 years. In terms of valuations, thanks to the recent correction, the stocks have come down to attractive valuations. On an aggregate basis, they're trading at about 8 times their FY22 estimated earnings, which is quite good. We prefer Ircon and RITES, which also offer a very good dividend yield.